WTF. Is Jerome Powell bullish on stocks? Because we just had a record weekly close. This guy looked happy today. It looked like he was taking a victory lap. So without wasting any time, what did he say? Well, he locked in a September rate cut. Now let's listen into what he had to say when he said the time has come for the Fed to cut interest rates. All right, Jerome Powell, take it away.
Our restrictive monetary policy helped restore balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remained well anchored. Inflation is now much closer to our objective, with prices having risen 2.5% over the past 12 months. After a pause earlier this year, progress toward our 2% objective has resumed. My confidence has grown that inflation is on a sustainable path back to 2%. It seems unlikely that the labor market will be a source of elevated inflationary pressures anytime soon. We do not seek or welcome further cooling in labor market conditions. Overall, the economy continues to grow at a solid pace, but the inflation and labor market data show an evolving situation. The upside risks to inflation have diminished, and the downside risks to employment have increased. As we highlighted in our last FOMC statement, we are attentive to the risks to both sides of our dual mandate. The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. We will do everything we can to support a strong labor market as we make further progress toward price stability. With an appropriate dialing back of policy restraint, there is good reason to think that the economy will get back to 2% inflation while maintaining a strong labor market. The current level of our policy rate gives us ample room to respond to any risks we may face, including the risk of unwelcome further weakening in labor market conditions.
All right, there you have it. So that was Jerome Powell giving you his keynote address at Jackson Hole. What did I hear? I basically heard him say, whoa, 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 what about the totality of the data? Well, that's exactly what we're going to look at now. Look at the headline here. Fed chief says he's confident we're on a sustainable path down to 2%. Well, let's look at the economic data, Jerome. Why? Well, looking here to next week on Friday, we're going to get European CPI. It's coming down to 2.5. Canadian CPI is at 2.5. So what does that mean? Job's done, right? Fingers up, time to take a victory lap. And that's exactly what stocks have done. Look at these year-to-date returns. Now let's look at 1 month performance. Yes, things are a little bit shaky. We talked about that reason on the stream this morning. These three companies are spending on AI, and that is likely going to benefit the block that's green here. That's NVIDIA. Why? Well, when they spend money, it goes to this company. So these stocks are down because they're spending a lot? That's what you're telling me? Yeah, they're spending a lot. It should help NVIDIA a lot. All right, well, looks like the job's done. The U.S. economy is the best one in the world. And, right, that sounded like a victory lap to me. Jerome Powell's been in charge since 2018. And I can tell you there was not a very nice time in December 2018 when Jerome Powell made a little bit of a misstep. He's really come a long way since then. And now what this is doing is making me think about whether it actually could be 1995. Hey, when we had a flash crash, no one thought this was a lot of people were thinking that we're going to be going a lot lower, or if we bounced, we would not be up here at all-time highs so quickly. Well, here we are. We're all the way back up here. So what does that mean? It means there's likely a lot of powder on the sidelines because it didn't take a lot of volume and we're getting a record weekly close. We didn't quite make it to a new all-time high. That would have been at 565.17. We got to 563.18. So if we look over to RSP, whoa, look at this stud, right? This is the average S&P 500 stock. Everyone says they want rotation. Well, that's exactly what this is. If you could please do me a huge favor and smash a thumbs up or consider subscribing to the channel, I would greatly appreciate that. So if we look at a lot of ETFs, like this one's crushing it. RSP is on fire. If you look at the Russell, yes, this one's catching some love too, up by 3%. There's so many assets that are having big moves right now. Let's have a look at a few. S&P up by 1, NASDAQ up by 1, dollar down by nearly 1. That's bullish for stocks. And we're actually starting to break down. We're now below our downtrend, and we could actually lose that 200 weekly moving average there. The VIX is up by 1% on the week, but it's down 9% today. The 10-year note, down at 3.8%. Look at these guys, though. SMH, not quite above the 50 DMA. Again, these are chips, up by 2.5%, though. The MAGs, or Magnificent 7, back above the 50 DMA, up by 1.8%. Large caps, or XLG, hey, it looks good. We're starting to invalidate this head and shoulders. RSPT, or equal weight technology, hey, looks good here too. 1.2 for RSP, 3% for the Russell, 1% for the Dow. But look at these ones. Bitcoin up by 6.5%. Ether up by 5.8%. Wow, look at these guys. Look at Tesla. Even Tesla's catching a bid. It's going to try to stop going down here. We can see that we have this downtrend to battle with, and that's going to be important. So as we're looking through some of these charts, we'll look at NVIDIA in a moment. What I'm really asking myself is, could it really be 2005? Well, I'm seeing the evidence that tells me that. We were at 530 at the time that I shared this. This is back to May. Well, we're like 30 points higher now. We're at 560s. So, wow, record weekly close. If we look here to the daily chart, there's only one day we actually closed a little bit higher. I'm going to a line chart, which you can see up here, because the line chart only cares about one thing. That's the closing price. So the only day where we closed higher is back to here. That's our all-time high on July 16th. So now, just within a month, just over a month, about 5 weeks, we're right back to all-time highs. And I don't think people believe it. So that's why this could truly be incredible. Jerome Powell might be the best banker ever. Why? He might have actually gotten a soft landing. Was it entirely because of him? Hey, I don't think it really matters. If the economy actually manages to not fall over, and we're going to get an important reading on that next week. Let's have a quick look here. So we're going to get a revision to GDP for the second quarter, and this should be at 2.8. That's a strong market. It was only expected to come in at 2% before. See if the number will load there. And otherwise, he might have actually done it. And what this really comes down to is whether you think that this time is different. Let me show you one more data point here. Let's look at the VIX. Why? You should remember, we've been talking about this. 2008, 2020, that was a global financial crisis. This was a global lockdown. So during those times, yeah, there was reverberations. There was echoes, which meant that stocks had a really hard time for a while. I think this time was different. And it was actually really good because a lot of things got shaken up, right? The bulls got shaken up. The bears got shaken up. Emotions went high and low. We were in fear a week ago. Now we're almost all the way back here into greed. What does that mean? Hey, mix it up. This is getting really spicy. So if we think about whether it's 1995, it's 2000, or if it's 2008, or if it's 2020, well, that's a lot of different scenarios. Trust me, I know. Something else that's really important here is that we want to look at what happens after the Fed usually cuts, because the odds are pretty terrible that we actually go higher. Have a look here. They pause, get a recession. Pause, get a recession. The gray areas are the recession. The bigger the gray area, the longer the recession was. So short pause, yeah, there's a recession. Short pause, recession. Here they pause for just under a year, starting to pause in September. And then in in August, they cut. Well, here this is the longest time we've had. This is the longest pause we've had going back to like 1997. I would call this a pause right here. So, okay, what's happening here? Well, we're either going to go like basically back down to zero, which means no interest, or it's 1995 and we can get a couple of cuts, and then the big one comes. Yeah, there's probably a big one around the corner, and we're going to have to see what happens here. So my point is just that it really depends on whether you think it's 1999 or going into 2000, because normally when the Fed cuts, that's usually when the biggest declines happen. Look what happens when the Fed pivots. Jerome just told you we're going to be cutting in September, right? It's time to cut. Time to come. He's going to be doing it in September. So when he does, what's the track record? Well, normally after the first cut, negative 36, 48, 27, 51, 58, and 35. Well, it seems like it's time to sell. So why are you bullish? Well, because ironically, people don't talk about these cuts right here. They're like, that wasn't the cut. It doesn't fit our narrative. We're going to talk about 1999 and 2000. Well, look right here. There's a cut and a pause, a little bit up, a little bit down. They're finding equilibrium because the economy's strong, which is what we're going to likely get confirmation of this week when the revision comes in. So from here to here, we went up by 220% after the breakout. That's number 4. We went up by an incredible 220%. So eventually we went down by half, but we went up by 221st. So what could really drive that? Because that's what people are wondering. NVIDIA reports earnings next week on the 28th. We're expecting an 11% beat, double digits. I think what's going to really matter is going to be their guidance. I just told you the companies that are getting punished are Google, Amazon, Microsoft, and these are the companies that are paying NVIDIA. So what is NVIDIA likely going to say? Well, again, I'm putting my my hat on here and thinking that if the company said we're going to spend a lot and we don't care how much we spend on AI, we're going to do it. We're going to sacrifice profit. NVIDIA's like, cool, burr, let's make some money. So I think their forward guidance will be good. And then if we think about something else which could drive the market after that, because this is likely going to be one of the most important events for the next, I would say, at least the next 90 days, if not the next year. And shortly after, only on September 10th, Apple targets September 10th to debut new iPhones, AirPods, and watches. What does that mean? It likely means AI devices. And these things are going to be shipping and reaching stores on September 20th. So NVIDIA comes in, again, if they crush, which it looks like they will, and they guide higher, which I think they will. Again, think, not no. And then Apple also comes in and delivers. Whoa, it's 1995, in my opinion. And this is where things could start to really accelerate. So with that said, I thank you very much for tuning in. If you want more detail, the video on the left will be a great guide. If not, I'll see you on Monday. Thanks so much.